Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, after a disappointing CPI, we can see that gold is out of the range again. So yesterday was very important for all of us because of the CPI. But the CPI was not very good for traders because at the time of CPI, if you're observing, probably you also saw that market was not responding properly. At the time of news, especially like CPI, NFP, we get to see high volatility. But for the last couple of months, okay, we have observed that NFP and CPI, okay, they are not giving us clear moves. Rather, we just get to see spikes. And yesterday also we discussed that dollar index is extremely down for the last couple of days. So no matter what news comes out, the chances are very high that dollar index or DXY is not going down further because DXY going below 103 means DXY will be heading towards 100 level, and if it hits 100 level, DXY will be heading towards double digit. And yesterday we discussed in detail that chances are very less dollar going down, and as expected, okay, dollar did not go down. The news was not positive for dollar DXY, okay, but still dollar managed to survive. Okay, this is the chart of DXY, and we can see that DXY or US dollar index is trying its best, okay, to take support. It's just waiting for a news so that it can go up again. But as long as DXY is trading below 104.50, the market will remain sideways. And if it breaks 103, then slowly it will be heading towards 102.5, 102, and eventually 100. But again, I'm repeating, chances of DXY going below 103 is very less because market is giving its tough fight to survive. NFP pass, CPI pass, DXY is still standing here. And those who are wondering why gold went up, and you can see gold approaches record highs. Gold rose to a 2940 per ounce on Thursday, approaching record levels as escalating global trade tensions continue to fuel safe haven demand. We have been discussing for the last couple of days and weeks that safe haven demand is still there and will be dominating the market. As expected, it is still there in the market. Okay, so my dear friends, no need to go into complications right now. Okay, we can clearly see the market is bullish. Okay, so if you have any buy, you can hold your buy position. If you're a swing trader, position trader, doesn't matter. You can hold your buy position easily with your stop loss below 2910. Okay, this should be a stop loss. And if market goes up, then you can trail your stop loss as well. But those who are already holding buy, you can hold your buy position as a swing trader and as a position trader. And those who are looking for fresh position in the market, it is very much clear to you that this market is bullish right now. Okay, so if you want to have an edge in this market, if you want to have a higher probability, then obviously it is better and safer for us to look for buy positions only. For example, in this situation, we can see that market is showing signs of a little reversal here. But always keep in mind that if the market sentiment is bullish, so no matter what we see on the screen or candlestick pattern we see, okay, it is going to be a temporary thing. And it is always wiser to follow the trend of the market. It means that if a market is bullish, market sentiment is bullish, try to be on the buy side. If market sentiment is bearish, try to be on the sell side only. In simple words, okay, in simple words, let's say there is a street fight going on. Okay, there is a street fight going on and you were just passing by and somehow you were just caught in between. Okay, on one side, okay, let's say, okay, there are 100 goons. Okay, on one side there are 100 goons, okay, and on the other side there are 10. Okay, do not consider them to be the superheroes. Okay, just normal, just a street fight gang war. Okay, so you need to pick a side. So what do you think? Okay, which side you should pick to save yourself? If you pick the side of the 10 gang members or goons, obviously there's a high chance that you will be beaten up very badly. You will end up in hospital. Okay, but if you pick the side of 100 goals, there's a high chance that, okay, you will be able to survive. Maybe you will get to throw some good punches as well. Okay, so here also, okay, we have a similar scenario. If a market bullish, okay, if you want to be on the winning side, you should always look for the trend of the market. In this situation, it is better to be on the buy side only. I know catching the reversal trades can be very enticing. Okay, we get the adrenaline rush, but my dear friend, adrenaline rush is something else. Making money is something else. Okay, so on the chart of gold, the best level to look for buy, okay, is around 2922 2920. You can see around 2922 2920. What do we have? We have the FIBO 38.2% retracement level plus, okay, we can also see that we have the previous resistance working as support. So if we combine both the factors, FIBO 38.2 is also a good level plus previous resistance working as support, makes 2922 2920 a very good level to buy. The second level or the second best support on the chart of gold is around 2913 to 2910. This is another good level where I can look for a buy position because of FIBO 50% retracement level plus previous support around this area. But the problem is that these levels are far away from the current market price. So in this situation, okay, we need to look for immediate levels, because if the volume of the market remains like this, then these two levels, maybe they are very good, very powerful, but they are not practical. So we need to look for immediate levels. And buying at retracement is the best strategy here. So the next best level, okay, if market reverses from this current point, again I'm repeating, if market reverses from this particular point here, 2947 area, okay, the next immediate level on the chart of gold will be around 2930. Around 2930, around 2928 area also we can look for a support, because okay, this was the resistance. We can expect the same resistance to provide support to the market again. So this is our third support. But if the if the market is super bullish, then obviously, okay, market will not come down to this level as well. And the thing is that already market has tested the level. You can see yesterday after the breakout, market took support and bounced. So maybe, okay, market may not come to this level. So we have another level around 2940 2939. Okay, the dotted line here, you can see the dotted line. This dotted line is also a minor support. Okay, why minor support? Because see, this was a very strong resistance. Okay, try to understand the logic here. This was a very strong resistance, means it will be a very strong support. The 2920 area. 2930 area was also causing a lot of trouble for gold. It was a strong resistance, so it will be a strong support. But you can see here, 2939 2940 was just the resistance for a small period of time, so it will be a minor support. So during the day, as a day trader, observe the market around this area. If you see market taking support, then only hit the buy button. But if you see the market has suddenly formed a red candle here, then obviously you need to avoid buying around 2939 and wait for the market to come down to 2930 2927 area. And in case market surprises us during the US session with heavy selling pressure or high correction, okay, we can look for buy on these areas only. When I'm recording this video during the Asian session, the market sentiment is very much bullish. So we are only considering the buying opportunities here. Okay, during the US session, if things change, if any news comes out, and if you see a trend reversal, you can follow that as well. Stay in touch with the news, because Donald Trump is making the market crazy. Okay, and if market doesn't come for retracement at all, we can look for a buy above 2948 as well. Okay, but buying at breakout is riskier in comparison to buying at retracement. But if market doesn't come for retracement, then we cannot help it, isn't it? So we can look for a buy at breakout above 2948 area. But always look for consolidation. Yeah, always look for consolidation. Without consolidation, if market goes for a breakout, there's a high chance that the breakout is not going to last long. Right now, we can see that we have a little consolidation here. If you see market forming 2 or 3 more candles, okay, then market goes up. then you can look for a buying and breakout. Your initial target should be around 50 to 60 pips. After 50 to 60 pips, if you see market is slowly coming down, you can exit. Then what you need to do is you need to again plan. Yes, you need to plan again to buy at retracement. And right now 2947, 2948 is a resistance, not resistance, okay, it's working as a resistance. So this will be the new support. So in this situation, okay, if you are looking for day trades, scalping opportunities, then this is not the ideal market. This is a market situation where you just take a buy at retracement, buy a dip, and you sit on it. Because if you scalp for 20-30 pips, then you will be missing the big profit. So if market goes for a breakout after 40-50 pips, if market comes down around 2948, 2949, okay, we can expect the market to provide or become the support again. So every resistance, okay, keep in mind, every resistance will work as a new support. Because see, right now this is okay, it's quite early here. So during the day, obviously the market will move in many ways. If market continues the upside and you watch the video after 8 to 9 hours, then obviously, okay, these levels will be not valid. What you need to do is, okay, you just wait for the market to come down to the previous resistance, because that will be the new support. This is the option chain data, my dear friends. Okay, and before 26 March, yeah, what? Before 26th of March, okay, we can expect the market to stay below 3000 level. Means if gold goes up also, we can expect the market to face resistance around 2985, 2990, because we have the highest number of contracts standing at 3000 level. And there is an addition also of 102 contracts. So if market goes up also, if market becomes very bullish also, okay, it is going to face some resistance. I'm not saying that it will be a trend reversal. For example, if any news comes or market becomes very bullish, then obviously it will break 3000 level, isn't it? But at least it will face some resistance. It means it will just face some temporary resistance. So this is how the market works always. Okay, for example, okay, we always believe that buying support means buy. Okay, we believe the resistance means sell. Okay, it doesn't work like that. Okay, otherwise all the markets in the world will be sideways always, isn't it? So the logic is simple. Okay, if a market is very bullish, okay, if a market is very bullish, then every support works. Doesn't matter how you bring it. Okay, it can be a support like this, it can be a price action support where the previous resistance will become the support, okay, or it can be in the form of moving average, super trend. So every support works, and supports are stronger in comparison to retracement. And sorry, resistance, and if there is a resistance which is very strong like 3000, but the market is bullish, so you will just see a temporary retracement or correction. After some time, you will see market going up again, and market breaks the level eventually. Just the opposite in case of support. Okay, I do not want to explain further because already the video has become very long. Sorry. Okay, so that's all from my side, my dear friends. Thank you so much. Bye bye. Take care and follow proper risk management. Market is super bullish, but if market goes for correction again, your positions may suffer. This is trading. Okay, we need to be careful, and risk management is our best friend. Bye bye. Take care.